For the next playbook setup we will be going over today is called the onion, or also called buy off of support or buys off resistance. So we already did the breakout, we did the celery, but what if we can't catch price on this big move up? What if, because it's overextended, what if we can't get in? Well, we simply just wait. We wait for resistance to be formed, and we are bullish on the higher time frame. Once that resistance is formed, you wait for price to pull back, because how market structure works is it's very simple, very, very simple. You create market structure by creating higher highs, higher lows, and then what price do? Higher high, higher low. So while most 90% of the traders thinking, oh, we're going to start making our way down, what we're really doing is just creating structure. And what I mean by structure is we're just planning a support so that price can go retest the top of the range where price is coming out of. And what that's going to look like is a new higher high being formed, or at least testing this area before making its decision on if it wants to break through and continue bullish or start making its way down. Either way, a lot of people, a lot of traders get caught up in this right here because they think that price is bearish now because we had a couple candle closures that closed red or bearish. But what it is just retesting the area in which price came from. What is this candle doing? It's just retesting. This whole move is just retesting, creating structure on the higher time frame to continue retesting the highs or continue bullish. And so the next entry, because we couldn't catch this because we're selling or buying from the bottom of the range, overextended, we simply just wait. We sit on our hands and we wait because we don't want to take stupid trades, because stupid trades cause you to lose money. When you lose money, you aren't profitable. So you only want to take A++ trades. So we sit on our hands and we just wait. We wait for these candles to form and give us better direction. And a lot of times what you're going to see is you're going to see price plant a support. And what I mean by that is price is going to stay above this area right here, and it's going to plant a support. A lot of times for more confluence, you plant a support. Actually, you plant a support and you break the lows. And all you simply have to wait for is a bottom wick on the 15 or the 30. I like to trade the 30 because you have more confirmation and you have a higher probability of the trade working out. So this game is just a game of patience. I wait for the bottom wick. You know, I wait for this bottom wick. Whoops. Wait for the bottom wick to form, tapping into this area, and I'm getting in on the break of these previous candle highs to go retest the highs that were created. And what that's going to look like in real time, or well, I'll try and make it look like real time, is I'm getting in on the break of these highs, and it's going to look something like that. Stops are going to be below the previous or the current, depending on how big stops are. And I'm going to probably close full here, and I'm going to look left and see if there's any chop that will indicate, hey, I know we have clean traffic, but were we ranging in this area here? Because if so, then I'm going to put a partial line or a break even or even close full, because I don't need to hold this whole trade to the upside. Like, I don't need to hold this. You can, but if price action tells me, hey, we've rejected right here, then more than likely I'm going to close at least half my position or go break even. And then if price stops me out, at least that's house money. Like, as soon as you go break even, it's house money. So whether you win or lose, at least you're not losing capital, right? And so this is what an onion kind of looks like. There are a few instances I won't be interested in an onion, besides not having a wick, you know, or a bottom wick, unless you grab the pack runner, and that is just a more experienced trade. I will do a video on that later on, but for now we're just going over the basics. Times that I will stay out of an onion play. For me, and for how I've learned, is that if price moves too far up into this range, I want no business being in there because price has already moved above 50% of the range. I don't want in. So say price moves and closes like this. That looks like more than 50% of the range has been filled already. So how can I be sure that if we get a bottom wick, we're going to continue filling that, especially when I showed you consolidation in this area right here where I was going to go break even. So that's one way that price will keep me out of a beautiful setup. I will have to sit on my hands and just wait for the next best trade. I'm always living to trade tomorrow because I know that if I follow my playbook and I follow my rules, I have seen life-changing money. I have touched life-changing money. And these are rules that I have for myself. And a lot of times is what you'll get is because you closed here, a lot of times price may just reject from here. And then you'll get like a range 2, meaning price may just come down and you might just range or maybe even get a closure below. But a lot of times price may just come down and then next thing you know, you're stuck in this range for the rest of the day. Like this range right here, you're stuck in this for the rest of the day or until volume time or an hourly closure or whatever. But anything above 50% of the range, I want no business in. I'm not entering because I need volume, or I need the range to make money, right? Wicks and clean traffic. This is an example of having clean traffic too. Just so we can clarify and I can, explain. This is clean traffic, clean candles down, clean candles up. This is not clean traffic. So I would never get in on a trade like that. So that's one way that I stay out. Another way is, like I said, no top wick. The other way and the other nuance that will keep me out of an onion play is if it closes not good. The body of a candle is like your business partner. So you want the body to close good and leave a nice wick. So say price makes its way. So let's just say like price opens up, you create this bottom wick, price opens up and it pushes, right? And then the last 3 minutes, price pushes down and it closes like this, but it was all the way up here. So it has this big rejection wick to the upside. I will not be a part of this because like I said, that this candle's body is my business partner and it's my deal or no deal. Why would price be all the way up here just to be pushed down? That shows that there's selling pressure. So it's probable that because you broke the highs on this previous candle, which could be the 15 or the 30, you're pretty much tapping into this resistance where price came from. It's a 50-50. It's a crapshoot if price is going to continue moving bullish or we're going to get something like this because price was all the way up. So this could be considered a celery even though it didn't close below. This isn't my trade. I'm just saying this is a celery pattern that price could just, price could seriously just do something like this. This is not a good business partner. Get your top wick and guess what we're doing? We're closing back in the range. And to look something like that and say my entry was on the break of this high. Well, now say I was on a current candle high. Now my trade looks something like this and I got stopped out and I'm going to be so mad at myself because I know better to stay out of trades when the body of the candle looks like that, because this right here, like I said, is not a good business partner. And if I'm going to do business and I'm going to risk, $500 to $1,000, I want to be sure that as long as I take a playbook setup and that the confirmation candle looks like a good business candle, I'm okay with losing that $500 to $1,000. But I would be kicking rocks if I got in on a buy when price looked like this. Because like I said, you already filled the range. Why would it be all the way up here and then price just rejected all the way down? Well, that could be sellers getting in the market, stopping out the buyers to continue moving downward. So that is how I would stay out of a trade. The body of the candle is your business partner and it's my deal or no deal. If I don't get exactly what I want, then I'm not entering. I would rather be out wishing I was in than be in wishing I was out. Because as long as you're out, you're still preserving capital. And that is the whole point of trading, is to keep your capital. So you got to go through the ringer to learn these things. But once you do, man, there's an unlimited amount of wealth to be out there as long as you follow your plan and you stay disciplined. The second type of entry is called let me just get this out of the way. The second entry is called the inverted celery. What the inverted celery represents is it's like an onion, but it's a little different. It has almost celery tendencies, but it stays above the range. And celeries work as breakouts. Celeries also work in ranging markets, but what the inverted celery is and how it's different from a normal onion is that liquidity gets grabbed. And so what I mean by that is the candle opens up like this. Because we close bearish above this, a lot of people are thinking, oh, I need to get in sells because price is bearish. So a lot of people are getting in at the break of these lows. And what this candle does, and for the 8-figure traders and the profitable traders that understand price action, their understanding is that we stayed above this area right here. So I am not taking sells. And also for me to take sells, I need a range 2 because we are bullish. I also need structure to be formed. So there's a lot of things that would keep me out of this trade besides just why sell because this candle closed bearish. So what I mean by that is inverted celery, like it has the word celery in there, similar, very similar entries, is that this candle is going to, because we closed above, in real time it's going to look something like this. Probably catch a top wick, and then you start to melt, right? And say, you melt into this area. So all these sellers, like I just said, are getting activated right here. All these sellers are getting activated right here. And they're getting stopped out because what they fail to realize is we stayed above this range right here to the left. Because we stayed above this range, you are still bullish. This is just price action. This is just structure being created, like I said, higher high, higher low. And then to potentially go retest these highs all the way up here. So what that's going to look like, probably within the last 5 minutes or 7 minutes of the 15 or the 30-minute candle, what you're going to get is it's going to look like this, and it's going to close. And this is probably my favorite setup ever because the probability rate is so high. And what that looks like is when the candle closes, price pushed all the way down. Remember, it was red all the way down. What that looks like is you have a closure like this, like a celery, small top wick, but it's there. But price drove all the way down, activating all the sellers on the break of this low and stopped them out. So now that's the buyer saying, hey, I'm ready to continue moving. And this is just basic market structure 101. This is an onion. This is buys off support. This is another way of looking at liquidity being grabbed, because this is thousands and thousands and millions of dollars getting stopped out because all these sellers, impatient sellers, got in, and then buyers are stopping them out. So this is millions of dollars in this candle, believe it or not. And that is my favorite entry because we stayed above this range. We're bullish. This is just price retracing to where it came to continue to go retest the highs. And this is my bread and butter. This is my favorite play. And when it happens, this is an A++ trade where I will risk heavy on this trade because it has a 92% chance of probability working out in my favor. You don't need a steep bottom wick on that next candle, but what you do need is you need a bottom wick. You need this thing to close with a top wick. You don't want it too big because if it closes too big, then I don't want that. Like this, if it closes like this, I'm not very interested in this because that's more of a doji candle. Instead, you want it how it is. Just a little top wick. Like you can say like this is good too, that's good. But anything like that where the top wick is bigger than the bottom wick, that's more of a doji candle. So you're gonna have to wait for another bullish candle to take buys. But if you can get something like this, where it's a small top wick, you grabbed all this liquidity to the downside, you're tapping into this range right here where price came from earlier. Price came from here. We're getting ready to take off. This is a great trade, my favorite trade. And what that's going to look like is you don't need that steep of a bottom wick because you already grabbed all this liquidity. And like I said, to move the market, you need liquidity, you need direction, and you need volume. And what you're going to wait for is that bottom wick. Preferably tapping to this resistance / support, entry on the break of the highs, right here, because you don't want to get in on Kerner candle because I was talking about in the video of breakouts that if it's like a 5 pip, you might as well just get in on the break of the highs because when you break previous candle highs and lows, that's indicating that volume is in the market. And so that's so you're gonna be getting in on the break at the previous highs, not the current, because this is probably like a 10 pip difference. I'm okay with that. As long as I get in on the break of the highs, there's a good chance that with volume, price is going to push us up after grabbing liquidity. Stops are going to go below the range because I can't do this because that's too big of a stop loss, too much capital I'm losing. And if I'm risking heavy, I have to just go below the range. And now we're ready to take off. And this is what the inverted celery is going to look like. It's going to look like something like this. I'm targeting, either that range to the left that I talked about right here, or I'm targeting this resistance. And break of the highs, I'm activated. A lot of times you just get a straight push, because why would you get a straight push? Because all this liquidity down here already got grabbed. So there's no reason for price to, mess around right here. When you break these highs, more than likely you're getting a straight push to the upside. It's fast. It's very fast, because why would we mess around after grabbing all this liquidity of sellers? Buyers are in the market. As soon as you break the high, indicating volume, you're off to the races. And, managing closing full right here, but probably go and break even at these ranges that I drew up earlier. But yeah, that is the inverted celery. It is probably my favorite play, and you see it. You don't see it as often as onions. You don't see them as often as breakouts, but you do see it. When you do, that is a trade that I'm willing to risk heavy on because of the reward. So, hope you guys enjoy the inverted celery and the other videos.